Time for Smart Charts with Abigail Doolittle, where we take a look at timely topics through the charts with the street's top technicians. And today, Abigail, it's all about gold.
You're right about that, Romaine. We're taking two on this. We tried Wednesday, and now we have Louise Yamada, the great Louise Yamada of Louise Yamada Technical Advisors, back. Such a timely topic, gold, considering we have the Fed next week. Gold having a tremendous year on the Fed's dovishness. It'll be interesting to see what the meeting brings. Talk to us about your long-term gold chart here.
Fascinating breakout here through 1400. You've got a symmetrical 6-year base. And remember, in technical analysis, the bigger the base, the higher in space is the potential. It's so symmetrical from the low in 2015, and we have targets that could take you first into the resistance of that 2-year top around 1500, 1525. But the interesting thing is that there's another principle of technical analysis. If the accumulation that follows the distribution, which was that 2-year top, is equal to or greater than the size of the distribution, this price may be expected to equal or exceed the prior top.
Wow.
So first time you're going to run into resistance as you get to those price levels, but then 1600 is possible, possibly even 18 or higher. It's a very interesting breakout that's taking place here in the gold market.
Well, it's interesting that you're saying that about the possibility of new highs, because John Roque joined one of our charting segments a few weeks ago, and he was talking about the possibility of a record high. So the question I have, though, so you think this breakout is for real and supported by this bullish MACD,
The bullish MACD and the monthly MACD, which is more structural, is also positive.
Is also positive.
Yes.
Now, this chart's truly interesting. This is the Dow to gold, and we can see here the peaks and the valleys here. Talk to us about what's happening here.
All right, this is the Dow Jones Industrial Average divided by gold price, okay? So when the line is rising, equities are outperforming the Dow. When the line is falling, gold is outperforming. What's interesting to notice is that the peak here was 1929, the peak here was 1966 to 68, and the peak here was 2000. Now, we know that those were the peaks in the structural bull markets that the equity market experienced, followed by structural bear markets. So as the lines came down, gold was outperforming during those periods. Now we're at a point here where it's interesting that the equity market is hitting new highs and gold.
What does that mean?
Is hitting. What does that mean?
Yeah.
Does that mean that people are afraid of the currencies? Does it mean that we're going to see an equity peak coming into place? And it doesn't happen overnight. It takes a little time. So it's very key to watch this. If this ratio were to break down, then we would see a situation where gold starts to outperform equities. Doesn't mean equities have to go down.
Go down.
They just don't go up as much.
Gold outperforms. Well, we'll have to bring you back on to look at a straight equity chart. But before we do that, let's take a look at GDX, because there's a lot of traders out there who they like to play the GDX, or the gold miners as a play on gold.
Exactly. There's a way to be into stocks with the ETF. Breakout, 3-year breakout here through 27 taking place. If you make it through 32, which is this central peak, that will equate to the 6-year base that we saw in the gold chart itself, and suggest that this could go higher, possibly to 40, where you run into the next resistance, and maybe higher.
And that is also supported by a rising MACD there.
Yes.
So that's pretty interesting that you would take a play. Would you prefer the GDX or GLD if you had to?
Well, the historic relationship has been that the GLD has done better than the GDX, but at the moment it hasn't made a decision on this breakout.
And if there's a scenario where both stocks and gold continue to go higher, maybe the GDX is the play.